Hey, Tom Hegna here. Got more questions. I got a lot of questions. You're sending them in, and I appreciate that. Keep sending in your questions. But these are some questions on life insurance. Tom, I still don't understand how term insurance inside of a universal life policy has tax advantage. Can you go over that once again? Yeah, so any universal life policy, whether it's a fixed interest universal life policy, an index universal life policy, or variable universal life, they all work the same. There's a term insurance component, and then there's an investment, and that investment either earns a fixed interest rate, or it's in multiple accounts in a variable annuity, kind of like mutual funds, they call them sub-accounts, or in an indexed annuity, it'd be you get an interest rate based off the performance of an index and their formula. But there's always that term component. Now, what people always said in the past is, oh, don't buy permanent life insurance, buy term and invest the difference. Well, that's what universal life is, but it's all under a tax-deferred umbrella. So let's say for a moment, you're not going to do universal life. You're not going to do it. You're going to buy term and invest the difference on your own. Well, when you buy term insurance, that money is all gone. Like if you don't die, that money's gone, and then you have your investment. The difference when you do it inside a universal life is all the money that you spend on term life insurance counts towards the cost basis of the policy. So if you ever take money out, or if you ever cancel the policy or surrender the policy, you've had tax advantage term life insurance because all those term premiums count towards the cost basis of the policy, and you only have to pay tax on any of the gain. Over here, you have to pay gain on all your investment, but you don't get any credit for the term insurance that you spent on your own. So that's what I mean about that universal life has tax advantage term life insurance. All right, I got another one. Tom, I have a big investor. He says life insurance is a bad investment and I can make a better interest rate somewhere else. Well, look, life insurance isn't necessarily an investment, but it can be a great wealth accumulation tool, okay? If you know anything about wealthy people, they don't have all their money in the stock market. They don't. They have their money in they put their wealth in safe places. And what I'm telling you is that life insurance is better than bonds right now. Bonds, look at what the 10-year treasury is only paying 1%. You know, a good life insurance policy is going to do anywhere from, let's say, 4 to 7%, and some do even more than that. You know, variable life can do 20, 30, 40% if the market's doing well. Index life can be double digits, okay? So you know, it's not about where can I make the most amount of money. With life insurance, it's about protecting your family, building a place that you can get tax-free income, and it's a great bond substitute. If you dealt with wealthy people and they were 60% stock, 40% bond, if you just got them to move that bond portfolio into cash value life insurance, you'd do very well, and they do better than they are in the bond portfolio. So that's what I mean about that. So anyway, I hope that helps. Just keep sending in those questions, and I'll keep doing these little video clips.